Click the bell icon to get latest videos from Ekeeda.
Hello friends, myself Professor Uday Bukre. Now I am welcoming you on your own YouTube channel Ekeeda. If you are watching my video for first time, I request you to subscribe our channel Ekeeda and also press bell icon for your latest notification. Friends, as we know, we are learning for CA Inter course, subject accountancy, topic single entry, question number 8, which is now on your screen. Let's read the question, students. A trader keep his book of account under single entry system. Question itself is guiding you. On 31st March 2010, his statement of affairs stood as follows. So I can say my opening statement of affairs, or I can say opening balance sheet, is readily provided. It will be taken to the respective places in the current year. They give you creditors, bills payable, outstanding expense, capital account, furniture, fixture and fitting, stock, trade debtors, bills receivable, unexpired insurance, cash in hand and bank. These are the balances given. The following was the summary of cash book for the year ended 31st March 2011. So they have given you cash book summary. That means cash account is readily provided by them. You can notice last year's closing 80,000 has become current year's opening balance. So it can be ignored in our all calculation. Cash sales are given, so it will be taken to your trading account. Receipt from debtors will be credited to debtors account. Receipt from bills receivable will be credited to bills receivable account. Payment to creditors will be debited to creditors account. Bills payable will be debited to bills payable account. Payment for sundry expenses will be debited to sundry expense account, and that will be ultimately taken to P&L. Drawings will be reduced from the capital. Cash in hand and cash at bank will be a closing balance which will be listed in your current year's closing balance sheet. So very simple. Cash book is also provided. Discount allowed to debtors and received from creditors amounted to 36,000 and 28,000 respectively. That means we have allowed a discount. So 36,000 is a discount allowed by you, for which you will say discount allowed account debit to debtors account. Discount allowed will be ultimately taken to profit and loss, and 28,000 respectively. So discount received is 28,000. It will be credited to P&L account and it will be debited to creditors account. Bills endorsed amounted to rupees 15,000. So bills endorsed enter will be creditors to bills receivable. Annual fire insurance premium 6,000 was paid every year on 1st of August for the renewal of the policy. So your annual premium for fire insurance was 6,000. It was paid on 1st of August every year. So that we will see. Furniture, fixture and fittings were subject to a depreciation of 15% per annum on diminishing balance method. So simple depreciation we need to provide. You are also informed that about the following balances on 31st March 2011. So these are the closing balances provided by them. Stock, it is your closing stock, closing debtors, closing bills receivable, closing bills payable and outstanding expenses. These will be the closing balance of the respective account, and it will have a one place in your balance sheet, asset side and liability side also. Traders maintain a steady gross profit rate of 10% on sales. So GP rate is provided 10% on sale. Prepare trading and profit and loss account for the year ended 31st March 11 and balance sheet on that date. So they have asked you to prepare trading PL account and balance sheet on that date. So let's prepare that. Students, these are the balances what I need to write in my book. Right. So I am going ahead with the balance sheet asset side first. Furniture, fixture and fitting 1 lakh. There is no purchase or sale of furniture, fixture and fitting. You can notice it from the cash book. It is not there. One simple transaction they mentioned that you need to provide a depreciation of 15% on that at diminishing balance method, that we will provide. So I am writing that. This depreciation will be also debited to P&L account. So I am coming to P&L account now. So this is how I have given depreciation effect. So I can say this furniture is done. Stock 6,10,000 will become current year's opening stock. So I'm writing opening stock 6,10,000. Next they give you trade receivable, bills receivable, for which we will prepare an account. Students, now I am transferring debtors as a opening balance, bills receivable as a opening balance. So I have noted down trade debtors and bills receivable. Next they give you unexpired insurance 2000. It is prepaid insurance for the next year, that means it is for current year. So I am noting down insurance now. Insurance will be taken as a separate adjustment here. So you can notice there is sundry expenses paid. I will safely assume that sundry expenses are including insurance of 2000 also, right? And they are saying that in the adjustment, they are saying that annual fire insurance premium of 6,000 was paid every year on 1st of August for the renewed policy. That means every year my insurance premium is 6,000. Insurance premium is 6,000. And one more thing, it is paid on 1st of August every year and amount is 6,000. That means if I calculate 6,000 per annum divided by 12 means 500 per month. If you notice last year's balance sheet, they gave you unexpired insurance of 2000. That means it's prepaid in last year for 4 months. So last year it was prepaid for how many months? 4 months. That means it was paid for the Jan, Feb, March and prior to that December. Right? So 4 months insurance was unexpired last year. So current year we are paying now. I am coming to this point now. Again I am noting down insurance. Firstly I am writing here sundry expenses paid during the year. Annual premium is 6,000. It was paid on 1st of August. That means August, September, October, November, December, Jan, Feb and March. 8 months come in the same year and 4 months we are paying for next, and it is happening every year. So prepaid insurance of last year for 4 months will become current year expenditure. So I am saying here add prepaid insurance of last year 2000. Obviously in current year also we must have paid insurance on 1st of August. That means current year also we paid for next year 4 months. So that prepaid of current year I will minus prepaid insurance. Prepaid insurance of current year I will minus and last year's prepaid I will add. I will not minus. Current year's prepaid insurance will be current year's asset, as last year's prepaid insurance was last year's asset. So current year balance sheet asset side. In this way we have completed adjustment for insurance. Now since we are talking about expenses, we will also consider outstanding expenses. Last year outstanding expenses were 45,000. Those must have paid in the current year. So in current year I will minus last year's outstanding expenses. And if there are some current year's outstanding expenses that I need to add in my adjustment, I can see that outstanding expense of current year is 5,000. That also I am adjusting now. Current year outstanding expenses will be current year's liability. So students, we have completed expenses. Importantly, what we learned in this example, that they have given you sundry expense as one big figure. It includes everything, whether it is insurance or it is other expenses, it includes everything. So we need not to worry about it. We have to adjust every expense against your sundry expenses paid, and that we have done in our example solution, right? Next amount given is cash in hand in your last balance sheet, that is already a opening balance of the current year's cash book. Trade creditors, bills payable, we will open an account, so I am preparing working note for that. So students, we have written opening balance of creditors 580 and opening balance of bills payable 1,25,000. Next, creditors, bills payable done. Capital account I will write in my balance sheet on liability side, opening balance of capital 2,50,000. In this way, last year's balance sheet is taken care. Now I need to take care information given in our receipt payment account. Importantly, it is a debit side. Receipt side is a debit side, payment side is a credit side. So debit effect is taken care. I need to think about second effect. Cash in hand, I think we have already considered in the last balance sheet. Cash sales I will take to my trading account directly on credit side. Cash sales, they gave you 73,80,000. Students, we have written cash sales, but I have also kept line for credit sale because we have a debtor, so there has to be a credit sale. So we'll wait and watch. Receipt from debtors. Can I say cash or bank account is debited? I need to credit my debtors account by cash or bank. Next, they have given you receipt from bills receivable. For this, I will credit my bills receivable account. On payment side, you can notice payment to creditors, that means cash or bank account is credited. So can't I say creditors account should be debited? 75,07,000. Payment for bills payable, cash or bank account is credited, bills payable account must have been debited. Sundry expenses paid were already considered. Drawings I need to minus from my capital. And closing cash balance will be your current year asset 127,300. In this way, we have completed writing the details of balance sheet and cash book from this. So this entire page is taken care. Now let us move on for the next information. Next information is given discount allowed to trade debtors 36,000. So discount allowed will be debited to PL account and it will be credited to debtors in PL account. Before I write discount, I need to take a total of this sundry expense finally in the outer column. So I am doing that. Now I am writing discount allowed. Discount allowed amount is 36,000. So I need to write 36,000 as a discount allowed. This will be credited to debtors. Discount received from creditors 28,000. Discount received will be credited to PL account. $28,000 discount is received, and that now I am debiting to my creditors account. So I have noted discount received 28,000. This information is done. Bills endorsed amounted to be 15,000. We endorse bills to our creditors, so entry will be creditors account debit to bills receivable. So we have done with the bills endorsed. Annual fire insurance premium that we have taken. Furniture, fixture and fitting subject to debris that we have taken. Closing balances are given. Closing stock 6,50,000. So I will note down my closing stocks. To effect we know trading credit and balance sheet asset 6,50,000. So we have recorded closing stock. They gave you closing balance of debtors, bills receivable, bills payable. Debtors, bills receivable, bills payable. So I am noting down these balances firstly in the balance sheet and then in the respective account. I noted those things in my balance sheet: debtors, bills receivable and bills payable. This will be a closing balance of the respective account. So students, I have recorded these three things: debtors, bills receivable, bills payable. Outstanding expenses were already taken care. Trader maintains steady gross profit of 10% on sale. So this information is given so that we can derive other informations also. Now firstly, one thing is sure, I must find out what is the amount of sales. If I look at this account, trade debtors and bills receivable, if you remember my lectures, I always mentioned close your bills receivable account first because it is an extension of your debtors account. Let us see if there is any transfer entry. Bills receivable is debited. It is always debited when we receive the acceptance, and we receive the acceptance only from debtors we know. So bills receivable account will be debited and it will be credited to debtors account. So I can say to trade debtors account. These are acceptances received. Debtors will be credited by bills receivable account 3,70,000. If I close my debtors account, now I will be able to find out what is the amount of my credit sale. So I will find out amount of credit sales. It will be a balancing figure on the debit side of your trade debtors account. I got my credit sales. Right, so credit sales is a balancing figure here. And this is, I will note down in my trading account, credit sales. This is as per our working note. 1. My total sales will be 93 lakh. Now I am closing my creditors and bills payable account. Let me check whether I can do that. If I look at the bills payable account, I know that there must be some acceptances which I gave in the current year. So let me firstly close down my bills payable account. Bills payable will be credited only when we give the accept, and we give the acceptance only to our creditors. So I am writing here by trade creditors account, which is acceptance given. Creditors will be debited for that. Now, if I look to close my creditors account, what is missing? Closing balance they have not given you, and they have also not given you purchases. So if I get any one of the figure, second figure can be a derivation as a balancing figure. So I need to firstly find out which figure can come up. Closing balance, so they have not given. Purchases they have not given. Have question given me some other information? Yes, question give you one information. See this last line. They are saying trader maintains steady gross profit rate of 10% on sale. So here I am. I can get my GP. Let's come to my trading account again. %10 on 93 lakh comes to 9,30,000. And this GP I am also noting here by gross profit brought down. I got the things. Now if I look at my trading account, credit side is complete. On debit side there is one information missing, which is credit purchase. Why I am not saying cash purchase? Because we have seen the cash book and we have not found anywhere cash purchases. So I will close my trading account. My credit purchases will be 84,10,000. I hope now you understood what is the importance of that last line. 10% GP rate is maintained. So that gave me my credit purchases of 84,10,000, and these credit purchases I will credit to my creditors account. After I write these credit purchases, I can close my creditors account safely. $89,90,000. From that I will minus all these debits. $6,10,000 is my balancing figure. These are my creditors closing, and these closing creditors I will write in my balance sheet on liability side. In this way I have closed my workings. All workings are closed, you can notice. Now I need to close my trading, P&L, and lastly of course balance sheet. My net profit is 326,300, and this will be transferred to capital. It will be added to the capital. In this way my balance sheet is also tallying. So very easy questions we have completed, students. Perhaps I can say there are no very big difficulties in this example. Still, if you have any difficulties, please go through my question, go through my solution. Still, if you have any doubt, please put in the comment box. I will like to have solve your doubts in time. Thank you for watching this video. Keep watching, keep sharing with your friends, and before I close the video, please subscribe to our channel Ekeeda, and also press bell icon for your latest notifications. Thank you. God bless you.